Hi everyone, today we got another elevator down style move today, continuation from yesterday into the weekend here. But let's take a quick look at the charts and wrap up the day as we head into the weekend. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. In news today, we got a little bit more uncertainty around tariffs, more injected into the global economy, and Trump signed an executive order adjusting reciprocal tariffs on a slew of countries from 10% to 41%. So huge levies, big move here, pushing markets down pretty aggressively. Some of these countries were Canada, Brazil, and Switzerland were hit pretty hard. And the news around Canada was interesting. He did talk about more about fentanyl, the weak border controls, and them not really wanting to play ball, which is kind of interesting. I feel like they would want to kind of come to a consensus, but they continue to kind of fight, and that is not super great for them. Although some of these are a little bit strange. The Falkland Islands got isolated at a 41% levy. They exported only $27 million in goods to the United States, most of which was non-fillet frozen fish. Not sure exactly what the goal is there, but that seems unnecessary of a target for the biggest economy in the world. So again, a little bit more uncertainty, and this is part of the catalyst of why we're moving lower today. And of course, we got the jobs numbers today, up just 73,000 jobs in July. Numbers for the prior month were also revised much lower, so rough numbers here. Estimates were around 100,000, ended up getting 73,000. Previous number revised down to a combined 258,000 from the previous numbers. We also did get a step up on the unemployment data to a 4.2 from a 4.1. Again, I don't really think that matters. We've been talking about really anything below 4.5, I would say, is probably going to be fine for markets. That's full employment. But it is a slight step up if it becomes a trend into that 4.5 area and that becomes kind of consistent here. And this kind of breaks through 4.2 up to that 4.5 level like I talked about. That could be concerning, but for now, this isn't super concerning to me. The main thing is that jobs growth has slowed and stagnated pretty aggressively. Moving over to Fear and Greed Index, we fell all the way to completely neutral here at a 50. Just a week ago, we were at a 73. This has been a precipitous fall, and this is likely to continue in my opinion. I think we'll get all the way into extreme fear before we see any bounces, but for now, definitely stepping down momentum all the way into regular fear. First metric to get there, put call ratio also elevating into regular fear, spiked up to that 0.7 area. VIX breaking through that SMA. Maybe that breakout is a little bit quicker than we thought. And then safe haven demand, look at all of these in fear already. Junk bond demand also spiking up a little bit. So bonds going higher, spreads going higher. Definitely some fear in markets here today. And then looking at those jobs numbers just a little bit closer here, 73 versus 106,000. You can see previous number revised down from 147,000 down to just 14,000. So big revision down there. Non-farm, private non-farms also here, 83 versus the 100. Previous number revised from 74,000 down to just 3,000. So big revisions here. Maybe that is why Trump is targeting the commissioner here. Definitely a little bit odd, bigger revisions than normal. They should be a little bit closer on that first pass. And then you can see unemployment number 4.2, expectation was 4.2. And then a little bit of soft data here, also slowing, 48 here on manufacturing PMI. Expectation was 49.5, previous number was 49. So slowing manufacturing, not what you want there either. But Michigan inflation, 5 years from now, lower than expectations. That's a good number. Atlanta Fed GDP for Q3, 2.1 versus 2.3. Don't love that either. And then moving over to the charts here on the S&P is down 1.64%. Big moves here. Previous day took out several days of trading. This took out several weeks of trading. Momentum bearish, RSI bearish, huge ramp on the volume. Looks like we're going to cut straight down to this 55 EMA there. Let's go ahead and extend out this trend line. Right there is where it should be. That puts us a little bit of confluence on that 55. Down at 609.59. Needs to get through 617.90 first, but I do suspect that it'll go here. Seems like a big move, but I do think we'll get at least one more day before we see any kind of real bounces through 617 down to 609. Then we'll probably see at least a little bit of a bounce from that level. But for now, this looks like where we're going, 609.59. And you can see it here on the hourly. Very much a downtrend. 9 EMA was holding as resistance on the hourly chart, and that continues to be the case. And we continue to sell here in the after hours, likely headed to that next target. Moving over to the Tasty charts, fell all the way down to that 144 EMA, down at 631.39. Continues to fall into that zone once again. You can see the big volume spikes over the last couple days. Still very much bearish conditions on the 4-hour chart. Trailing stop stepped all the way down to 637.04, so pretty much in the middle of this trading range from the last couple of days into this fall, and now we are into the zone again. Do we see a little bit of a bounce before we get a kind of resumption here? We are definitely extended way below that lowest ATR band, but looking at that daily chart here, you can see we touched the 34 EMA. Your lowest ATR band is going to be a 613, and then like I said, you have that 55 EMA sitting there at 610.50 or so. I do think we're probably going to go into this range before we see a little bit of a bounce, and then I would expect bigger continuation. Part of it is because of the trade talks, part of it is the jobs data, but part of it is also this massive rally that we've had, and now we're just getting a more true pullback like we should have had, honestly, back here if we wanted to have a more healthy rally. Moving over to the NASDAQ, same kind of thesis, down almost 2% on the day on the close, continues to fall after hours. That next level for me is going to be 551.56. We came down into that zone and tested it. 551.68 was the low. Bounced slightly into the middle of the day, and then we ended up going back down into that range. 553.20 is the current price. I do believe we'll probably gap down into the Monday. Momentum bearish, RSI bearish. Big volume on the selling. 55 EMA is that target. 540.58. Next level here, 545. So expecting at least a sell of about 1.5% to touch that next level. 55 EMA is closer to 2.25 lower. And then looking at the intraday price action, you can see that initial push, retested the level here, key level. This is where I went short, got the sell into here, took profits, did go short again into the end of the day, and so far that's been good. Looking for this to break here, like I said, and then 545 would be the next one, and then 538 is that next level. That is the expectation for me. And then looking at that Tasty chart here, you can see the lowest ATR band, 543.41 is that band, 55 EMA in there, 540.60. So this is the zone. Once we get through here, I think we'll go to here, and then I would expect at least a little bit of a bounce. Huge volume on the sells. Do expect this to continue over the next couple days at least. But looking at that 4-hour chart, again, 144 EMA in there at 550.40. Obviously a little bit extended in the short term. Maybe we get a little bit of a bounce. Maybe we just get another gap and fall. I honestly thought we were going to see just a little bit of a bounce early this session, but didn't happen that way at all. Just continued to fall super aggressively. So for me, I still think this is going to continue. Moving over to the Russell and the Dow here, you can see the Russell did fall 2%, but it fell a lot more during the session, going almost to that 211 level, ended up holding the 55 EMA on a closing basis. Huge volume on the session, 63 million, which is basically 3 times volume. Normal volumes in here around 24. You can see it did get a nice bounce. It was down closer to 3.25 at the lows, ended up bouncing about 1.25%. So interesting move here. Is this a little bit of a bounce kind of hold zone? I doubt it. I think we'll probably go into that area and continue to fall, maybe to that 144 EMA around 210 could be interesting. And then looking at the Dow, same kind of thesis here, almost getting to the 55 EMA already at 433.06. The level here, 432.78. Again, bounced to the middle of the candle. I think it was just extended. I think we'll get the continuation lower though early next week. Same kind of thesis, momentum bearish, RSI bearish, big volume on the sell. Moving over to the Mag 7. Mag 7 was down almost 3% on the day, a little bit more during this session, hitting that 21 EMA, hitting VWAP, continues to fall here after hours, but structurally, this is not actually broken. You got the 21 EMA hanging in there. Looks like it's just a massive gap up, hit the trend line, gap down and fall. So island reversal, kind of. I would suspect that this is going to fall at least to the 330.67 level. 55 EMA is probably in play at 322, but remember, this is the Mag 7. These are the strongest stocks in the world, stocks that people want to own for many, many years to come. I don't really believe that this is going to have a major pullback without more news, more catalyst to the downside. Moving over to Apple and Microsoft. Apple having a terrible day, doing exactly what we thought it was going to do. We said this was a topping pattern, and sure enough, it was a topping pattern. Big sell over the last 4 days, expecting this to go at least to this 195 area. Momentum bearish, RSI bearish, big volume. Continues to sell, expecting at least 199.50 right in this trend line and support area, but I do think this will go back to 195. If that structure breaks, your next low is going to be 186.81, and then looking at Microsoft here, down 1.76%. If you even can call it that, we're still above this consolidation. Post earnings, massive earnings. Still very expensive company, but still growing at a very fast clip. I think this likely pulls back, fills the gap, and then we'll probably see it hold in here. I don't think Microsoft is going to go down the way everything else is. Moving over to Tesla and NVIDIA. Tesla did what we thought it was going to do, went to the level 301.93, overthrew it pretty dramatically down to the 297.50 area. I still think this will probably go down to the 290 area ultimately. Momentum bearish, RSI bearish, pretty classic move here. Breakdown, retest, breakdown, still looking for either a double bottom or a lower low in here around 280. And then looking at NVIDIA, even NVIDIA down 2.3%, but again, structurally this is not broken. 21 EMA still support at 169.55. Moving over to Amazon and Alphabet. Post earnings, Amazon down 8.25%, continue to fall after the gap down. 212.25 is still your support in here. Momentum bearish, volume bearish, RSI bearish. Everything says this should continue to go. I think we'll probably at least retest the 200 there at 209.57. And then looking at Alphabet, continues to fall as well, 1.5%. Still structurally intact, 21 EMA support there at 186.83. Moving over to Staples and discretionary. Staples hung in there, up about a half, still holding this structure in here. It's still a downtrending structure, but we did bounce from that lower trend area. And then looking at discretionaries in here, fell all the way down to 215.06, touched that level and bounced a little bit. I don't think it's really going to hold. I think we're going to at least touch the 200 at 213.50, and then your next kind of level is this 210 area, the consolidation low back here. But big volume, big selling. Of course, this is being driven mostly by Amazon, but also Tesla. Moving over to Breadth. Breadth has structurally broken on both now. You can see we broke below this level, over through the 36 level. I think this is probably going to go at least to the 16 area. Let's go ahead and extend this out. Back in play. Really takes you into that same kind of area around 16 to 19. Momentum bearish, RSI bearish. I think this will get to oversold conditions. Then we'll see what happens from there. And then looking at 50 days, same kind of thesis. Broke well below this structure. This was kind of broken yesterday, but it's below everything now. Didn't quite get to the 40 level. I think it probably will. And then probably, if I had to guess, 32.22 would be my next level. Momentum bearish, RSI bearish. Moving over to the dollar. The dollar had a terrible day here as well. You can see unemployment data, huge impact, of course. Big sell today into this zone here. Realistically, I don't see this structure being broken. I think this is probably just a pullback into this area here around 98.47. Does it hold this area and then continue to push? Maybe, maybe not. Momentum is a little bit bearish here. RSI still right at the SMA. It's technically below it. We'll see. We're right at this support level here as well from the kind of mid-July time frame. Need to hold this as a support. And then if we do, then we're looking for kind of 101 to 102 in my opinion. Moving over to JNK and TLT. JNK, big gap down with the unemployment data, not great at all. And then looking at TLT, good move there. Got through the trend line, interesting. Does this push to the 200, around 87, 82. Next level, 88, 89, 16. Next level, 92, 82. Right at this kind of consolidation top before the big move down. Love to see a break above the trend line. Want to see the continuation through on that. The 200 is probably going to be resistance, but we'll see. Once we get through there, I think there is a lot of room to the upside. Moving over to the VIX. VIX spiked through the trend line, held well above it, held above the 20 level. Do we push to that 28 level before all this is said and done? Something similar to this where you get the breakout, big move up, pull back to a higher low setup, big spike. I think that's ultimately what we'll get. Whether 28 is the short-term level or not, I think that's a little debatable, but right now we're a technical breakout. You would expect a continuation to that next zone. Moving over to my accounts, I made money on the day. Love to see it up about 130. Really should have been closer to 200 on the day, but it's showing $50 open loss here. I'm not sure why that is. This is the exact trade price, and the last price is also the same. So this should be an open of 0, and the P&L on the day should have been closer to 170. So I took this trade, like I said, at that resistance resistance area and then it sold off. Really deep in the money is 530 here for 42 days from now. I do suspect a lot more falling. Huge credit on that. Max profit would be close to 6,600 on this trade if it were to expire out of the money. I don't necessarily believe that that's going to happen, but for now, I do believe there's a lot more downside and I do want to take advantage of that. So short the NASDAQ as we head over the weekend into the Monday. Let me know down in the comment section what you think of the jobs data. What do you think of the firing of the commissioner? Is it a bit of a shoot the messenger scenario, or were they actually doing a bad job? Let me know. Otherwise, where do we go from here? Will we see a bounce? Is this a short-term pullback, or is this something more long-lasting? Put it down in the comment section. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.